Welcome to Looking at the Markets with David Modell. Today's special guest on Looking at the Markets is Mr. Gary Wagner. Mr. Wagner, who has asked that I call him Gary, is a leading expert on one of my favorite commodities, gold, as well as other precious metals. He is a regular contributor to kitco.com, and he is the executive producer of the Gold Forecast, located appropriately enough on the web at thegoldforecast.com. Check that link in the description. On Twitter and stocktwits.com, his handle is @goldforecast. So thank you, Gary, for joining me today on Looking at the Markets.
Hey, my pleasure to be here.
Yeah, and I see you came handy and ready with charts. So let's
always have a chart.
Yep, and I wanted to start with gold because that is your forte, or one of them, if that's okay. Now, gold investors have survived a bit of a rough patch from 2012 to 2015. But now it looks like things are really starting to turn around for gold. So should long-term investors expect more upside? What do you think?
Well, especially for long-term investors, I think that gold is not only poised for a move, but we have really turned the corner in that we are now in a bull market rather than a bear market. What I mean by that is if you look at a long-term chart, a weekly chart, for example, and in fact, I'm going to try to compress the chart that I have on my screen, but since the market hit 1900 back in 2011, 2012, on a technical basis, we could say that the key to what we're looking at is that we have had a series of lower highs and a series of higher lows.
That's right.
Now, that was evident in the market for quite some time. In fact, all the way up to, as you said, about 2015. And the key distinction to what we're looking at now is whereas we were seeing a series of lower highs and lower lows, at the end of 2015, beginning of 2016, gold hit 1040. You can absolutely see that on the screen as this low that got hit back in December of 2016. From there, we had a distinct difference, and the difference was when we look at highs, for example, we can see that as the market went down, it's very easy to see a series of highs that continually got lower. The same thing with these lows. We had a series of lows that continually got lower. And whatever we want to say, it's evident that we were in an absolute bear market, and that's what you were talking about. Now, here's the key distinction. Beginning in 2016, the next high that we hit was up at around 1280, and that high was absolutely above the former high, which was below 1200. Then it sold off a little bit to 1200, and so the low of 1200 is absolutely above 1040. So you got 1040, then you've got 1200, then we had another higher high, which took the market roughly to $1,380. That's the highest it's been since the market sold off. And then when it came down to a low, the low was 1120. So we do have a series of now higher highs and a series of lower lows up until this trading point. For this model to be correct, what it necessitates is that over this next rally, we actually take out the former high and trade above 1280.
Gotcha. And I'll be looking for that. Very good, sir. Now, let's get to something that I saw in Fortune magazine a couple days ago, citing global instability. A recent article in Fortune magazine was titled "Blame Trump for Surging Gold Prices," Goldman Sachs says. So it wasn't so much Fortune magazine as Goldman Sachs saying that. Would you agree with this?
Well, absolutely. I mean, I don't know if it's the first time in history, I believe that it is, that we have a gentleman at the helm of our ship who has never held a political post. That might be true for someone like George Washington before there were political posts, but we've got a non-politician who has a very unorthodox leadership style. Whether you love him, like him, or hate him, you have to acknowledge that his style of leadership is unconventional, to say the least. Add to that what's going on with North Korea right now, and some of the other geopolitical hotspots, and you have the necessary components to see the market run.
So, and it's interesting. Of course, we're not making we're not taking a political side here. We're just saying how it is. He is unorthodox, and so it's been very interesting so far. But we do see rallies, and as you pointed out, we're starting to see not lower highs and lower lows anymore in gold. And so I myself am quite bullish on it. Now I wanted to move on to the U.S. dollar versus gold. The U.S. dollar and gold, they tend to move in opposite directions, at least on the charts. Since the U.S. dollar is down so much in 2017 so far, would it be a good contrarian play, in your opinion, to invest in the U.S. dollar?
My sense is right now the dollar could fall further. So I wouldn't feel it's the appropriate timing for a contrarian play, because the basic tenets that have caused the U.S. dollar to fall under pressure, falling about 12% alone this year, are still prevalent in the market. The only time a contrarian theory would make sense for the dollar would be to pick a spot when those variables shifted. In other words, when the Fed got very aggressive about raising interest rates, which right now they're not, that would prop up the dollar. So there are things that would prop the dollar up, and I don't think that we're seeing them right now. Secondly, we have a president that has stated on record that he believes a lower dollar is good for our economy.
That's interesting, and it's not something you often hear from somebody in that position. And so, if he says it, and he's the U.S. president, then maybe we ought to be cautious when taking a long position. All right. Now I wanted to shift over to thegoldforecast.com. I've been a fan of the Gold Forecast, your YouTube videos, your Twitter account, Stock Twits, and so on. I've been following you. Now I know you have subscription services. What kinds of profits have subscribers enjoyed on thegoldforecast.com?
Well, we've been very fortunate, not only this year, but since the inception of the Gold Forecast in 2009. We have a track record that sits up on our website, and not only is it just a track record, but since we produce a daily video newsletter, for every buy, we have a video that accompanies it, and on the cover or sell, we have a video that covers it. So it's absolutely transparent in terms of what our track record is, because it's quite good. A $10,000 investment back in 2009, trading a single contract of gold with us, buying when we say to buy and selling when we say to sell, would now have a value in excess of $140,000. So that's an overall look at it. Now, 2015 was our toughest year. It was actually the only year that we didn't produce any kind of profits. We took about a 3% drawdown, 4% drawdown, and that was the only year that occurred. Last year, for example, we produced over 380% profits for our subscribers, and this year we're up over 100% currently year to date.
That's fantastic. Amazing returns. And wow, okay. I'm very impressed, and I don't see why people wouldn't at least visit thegoldforecast.com, look at all the resources on there, and then sign up as a subscriber. Now, wanted to talk about gold and its relation to cryptocurrencies. Would you say the recent strength in gold and cryptocurrencies would be indicative perhaps of a desire to move away from fiat currency?
Well, absolutely. Cryptocurrencies are relatively new in terms of the environment, and I'm still trying to absorb any kind of long-term effects or repercussions that they have, because it's the first currency that isn't a fiat currency, but also not some sort of a tangible asset. Gold, for example, which has stood the test of time as a currency and is actually considered to have intrinsic value, will probably never be worthless. An ounce of gold, you're going to pay something for it. Right now, you have to pay about $1,300 for it. Years ago, you had to pay $30 for it. So there's always been some kind of an intrinsic value to it. The thing about cryptocurrencies that scares me a little bit is, although the algorithms are sound, it's it's not backed by anything except that you have a pool of buyers and sellers that make it a liquid market.
Right.
I don't know what the long-term effect of a cryptocurrency is going to be, honestly, but I absolutely believe that this recent strength that we've seen where Bitcoin, for example, has increased by gazillion percent is absolutely due to a lack of faith in fiat currencies.
Sure. And perhaps adoption, I think, by many young people in this new exciting cryptocurrency system. It's kind of a way of sticking it to the man, or at least to the Fed and to the central banks. So I'm very excited about it. But like you said, gold, you really can't beat gold if you're looking for something that is backed by something real. And so I definitely see where you're coming from with that. Now, going back to investing in gold, different ways to invest in gold. Some traders use mining stocks, such as Hecla Mining or First Majestic Silver, as proxies or substitutes for investing in the physical precious metals. Would you recommend this kind of approach?
It absolutely is something that I would recommend for certain types of investors to fit within their portfolio. Not the issue that I have, but the challenge that I see with the mining stocks is you've got the value of the underlying precious metal, whether they're mining gold, silver, platinum, or palladium. And palladium, what a crazy move we've seen there. Mm-hmm. However, the variation between different mining stocks comes down to management, cost per ounce to get it out of the ground. There's a lot of other variables that come into play when you look at a mining stock. Of course, if gold runs from $1,000 to $2,000 or runs from $800 to $1,300, the mining stocks are going to benefit. But what percentage an individual mining stock benefits from it is really determined by more than the price of the underlying price of the precious metal. Sure. You have to add, how is that company managed? How are they mining the precious metal? How much ore do they believe is in the ground for the land that they're owning or leasing? So because of those additional variables, it is a well-qualified investment. It is something that many investors should look to add to their existing portfolio, but they have to add with the realization that there's more to a mining stock than the price of the underlying precious metal. And they have to do their homework so they understand management, is it sound, and other variables. But given those parameters, absolutely. Now, one thing that investors might want to do if they're looking to invest, but not invest in mining stocks, is maybe the EFTs, the electronically traded funds, such as GLD. Those, you are getting a more one-to-one relationship with the underlying move, but what you will not get is if it's really sound management and they're pulling it out of the ground at a very, very nice price, those mining stocks will overperform or perform better than the underlying metal. So it's really up to you as to how that would fit within a portfolio, but certainly to consider mining stocks or the electronically traded funds is an excellent way to get involved in the precious metals.
I totally agree with you. I couldn't have said it better. As far as investing in ETFs for gold, I like GLD. I actually like IAU, ticker IAU, because it's much cheaper and it has plenty of volume, just like GLD. But yes, investing in First Majestic Silver Corp, for example, is not the same as investing in silver. And so we all have to do our due diligence. Now, speaking of silver, I once spoke with David Morgan, and he suggested that there will be a significant silver shortage. Would you agree with this?
Honestly, I do not know. I can tell you this. I have been a market analyst for going on 35 years now, and I have watched the precious metals run. I have watched them decline, and it is the not lack of liquidity, but it is the thinness of the trading market in comparison to something like gold that will have silver outperform gold as the markets are moving up, because they do tend to run in tandem.
Right.
But when gold or silver are selling off, silver tends to take the blunt of it in terms of a reduction of capital. It tends to have a greater drawdown than you get in gold. The other thing about silver is that you get these spikes in silver that are outside of market variables, and I think inside of tightly controlled trading partners. And I'm not talking manipulation because that's too harsh of a word. But if you put a large order into a market that is not doesn't have the volume to absorb that quickly, you will get these spikes. And so you tend to get that with silver. However, to answer your question directly, I don't know if we're going to have a silver shortage because I don't have those numbers in front of me.
Understandable. And finally, palladium. Not as often talked about as gold and silver, but palladium is an exciting metal for me, precious metal. Palladium has marched upwards almost continuously in 2017. Do you think it's too late to take a long position in palladium now?
You know, that's a really good question. I mean, we're setting up we've just pulled a palladium chart up. It's a weekly chart, and we can see that it actually touched $1,000 recently.
Yep.
The high today, well, I'm not getting highs and lows because we're in the afternoon session, but this week actually, it seems as though it touched 1,000. What I'm trying to do, and let me convert this to a monthly, and the reason being is I want our traders to really see where the market's been in comparison. It'll take me about a second, and then we'll get a monthly chart up. Hold on.
Sure. While you're doing that, can I just ask what platform you're using? This is a very attractive platform.
I am using eSignal by Interactive Data. I have used eSignal for years when it was Data Broadcast Company. Right. There's a lot of good platforms out there. I'm just comfortable with this one because I'm using it.
Sure.
And the reason I pulled up a monthly chart was to illustrate where this market has gone. And your question was, is it safe to buy in this level?
Sure.
Well, we're looking at the all-time high right now. Again, it's a very long-term chart that occurred, 2001? And that's when the market touched just at around 1,100. We are now at 1,000, so we're not near the record high, but we're much closer to the record high than gold is to its record high of 1,900 when you compare that 1,300 current pricing. So my sense about palladium is, could it go higher? Absolutely. But we are definitively above the former high, which sat at 900, and the high below that, which was 850. So it's not as though we are in uncharted territory, but we are in territory that we haven't seen for over a decade and a half.
Right.
In other words, be real careful, because when this market falls, and all markets peak and all markets fall, Paul Volcker used to have a saying, trees do not grow to the sky, they never have and they never will. In other words, there are absolute tops to these markets. When it gets into this territory, it puts more initial risk in betting on the long side. Yeah. That doesn't mean it won't go higher, but there's intrinsic risk that's building.
Yeah. And looking at what happened in 2001, I'm not going to buy at these levels myself. I'm not saying that's going to happen again, but yeah, I like to buy low, sell high. So I would recommend, as well as you are possibly recommending, caution at least at this level for sure.
Absolutely.
Yeah, yeah. All right. Well, your charts are fantastic, and your knowledge is really deep when it comes to precious metals and the economy in general. And I want people to be able to get in touch with you. So how can people contact you for more information about your services and about thegoldforecast.com?
Well, they can always write me directly at Gary@thegoldforecast.com, one word, and I will get back to them. And go to our website, thegoldforecast.com. All of our videos and full detailed reports are published live to everyone with a 14-day lag. Of course, our premium subscribers get the daily report as it comes out that day. But because we have a track record that has been released to the public and all the videos that are released to the public, our entire database of charts, our database of videos are available to a non-subscriber to look and see what we've done over the last 7 years, 9 years, and then make a decision based upon your research into our work.
Yeah, and we can see the transparency there. We can see your track record, which is really impressive, and you are outperforming. So, Mr. Gary Wagner has been my guest today. I've learned quite a bit. Love that platform. I'm going to start looking at the gold forecast, and I'm also going to look at eSignal.
All right.
I like both. You're welcome back anytime. If there's any time you would just want to express something on my show about precious metals or anything else, you're certainly welcome to come back to Looking at the Markets. Thank you, Mr. Gary Wagner.
You're very welcome. You have a great day, and I really think that we've got a good run that's still in play in gold. I think that we will take out the highs that we hit last year at 1380. It's essential, if the model that I've been following is actually a valid and correct model, we have to get a higher high than the previous high. Yeah. We could get a compression, but it is more likely that we'll at least make a play or a move for that. And I don't think 1400 is out of the cards either. Am I looking for 1900? I don't ever think that I am, and I think that when it runs there, I won't be prepared for it. As long as I'm positioned properly, I don't care. But there's more in store is what I'm saying.
Yeah, very good. I didn't even ask for your target price. You gave it to me anyway, and I appreciate it.
I figured it's important, David.
You got me there. But I figured you were asked that so many times. I didn't want to go there, but you went there anyway, and I appreciate it. Mr. Gary Wagner, thank you so much. You're welcome back anytime, sir.
Thank you, and have a great day.
Thank you for watching. Please like, comment, and subscribe. And I'll see you next time.